Get this over here, click on this, click on that. I think we're getting all set up for the live feed here, the YouTube feed. Okay. Just take a few seconds here while this is connecting up here. So, and then we should be good to go. I also see a lot of people still joining us here, so we're gonna wait to give them a couple minutes here. Actually, so over here, click on this, click on that. Okay, I think we're getting all
live
set up for
streaming
the
is going. We're on
live feed
YouTube.
here, the YouTube feed. Okay.
And I better
Just take a few seconds here while
you know
this
what? I
is
have to close it
connecting
off
up
so
here.
that we
So, and then
don't.
we should be good to go. I also see a lot of people still joining us here, so we're gonna
Wait,
wait
it's
to give them a
okay.
couple
Now I
minutes
gotta
here.
turn
Actually,
this
so over
on
here,
to,
click on this, click on that. I think we're getting all
live
set up for
streaming
the
is going. We're on
live feed
YouTube.
here, the YouTube
Where's
feed.
the live
Okay.
feed? Oh boy.
Just take a few
I
seconds here while
think
this
what
is
happened was
connecting up here.
we
So, and then
don't.
we should be good to go. I also see a lot of people still joining us here, so we're gonna wait to give them a couple minutes here. Actually, so there we go. I was getting some feedback there. Okay, good. Okay. Pretty hard to talk over feedback. All right, so I think we're good to go. Come on in, gang. A lot of people joining us here. Oh, hello from St. Louis. Okay. Good evening from Chicago. Okay. All right. Wherever you are, wherever you're watching us, whether it's live through YouTube Live, through a recorded session, because these sessions are recorded. So good to have you all here, folks. Let's hit this button. Now we are all set to go. Good evening again, everybody. Welcome to DayTradeSPY.com's Week in Review, Sunday, August the 2nd, 2026. There I am, living color. Actually, it looks all red, doesn't it? I'm not really red. I'm not really flushed here. I think what's happening is, I'm not really sure why it's all red. What if I put this light on here? Would that help at all? A little bit? That's a little bit better, isn't it? Okay. Anyway, let's move along here. To get the technical stuff out of the way. My name is Hugh. I am the presenter here as I am. I think we've done about 850 of these since we started back in May of 2010. Something like it. I'll have to get the exact number one of these days, but I think we're pushing 850 of these Sunday night sessions. So anyway, good to have you here, and I know some of you have been here, all 850 of them. Folks, there's a questions box open for your questions and comments. You'll find that little icon on your Zoom dashboard. Just click on that. I am the only one that sees that, so go ahead and say whatever you want. All right, we have Reggie Asheville, North Carolina, Phil T from Georgia. Okay, who else do we have chiming in here? Okay, there's somebody from South Carolina. There's a couple from Florida. We got people from all over. All right, all over. Let me see. All right, here's what we're going to do here today. We are going to discuss last week. Take a look at last week, the upcoming week. That one passed. Last week. Where did I go? Where did I go? Last week. Why can I not get the thing here from last week? Let's try this again. All right. For some reason, I am not seeing here I have a little problem with my PowerPoint here tonight. Okay, discuss. Well, I'm going to try this again this way here. How about if we do it this way? Well, my name is Hugh. We know that. Last week, to be discussed. Last week. I know what I'm going to do. I'm going to stop this PowerPoint and then bring it up like this here from the current chart, from the current slide rather. Last week, to be discussed. Last week, well, for whatever reason, it does not want to let me carry on as to what we're doing here. I wonder why. That is so strange. Okay, well, I'm not going to worry about it. We're going to talk about the upcoming week. Got a 2-minute tutorial. Going to answer your questions, and we got a contest. All right, and then there it is. Of course, now it comes up, right? Okay, you gotta love technology, folks. You gotta love technology. So. Here's the standard disclaimer, folks. You understand how this works. You fully understand, except the financial risks involved in trading securities. That risk can be substantial. You should carefully consider whether such trading is suitable for you in light of your personal investment objectives and financial resources. A lot of people get into this thing thinking they're going to get rich, and they blow up their accounts, never see them again. They got to scramble to make up all the money that they lost. Very important, okay? By accessing this webinar, you understand you're not receiving any advice as to what I went to buy or sell, but I'm simply receiving information for educational purposes only. Any decisions concerning your trade are solely your own and meet your personal objectives and risk tolerances. You alone are responsible for all your own trading, and past performance does not guarantee future results. All that said, good trading, right? Good trading. Folks, my name is Hugh, and let's see if this works. Long-time trader, publicly teaching trading since 2010. Started out by accident. I think I might have had I'm not sure if they published it yet or it's coming, but there's kind of a Q&A. I think they published it this last week. If you got the newsletter, bit of a history as to how I got into this thing. Pretty interesting, actually, by accident. When my home financial advisor blew up my account, I didn't realize at the time it was such a blessing in disguise, but it truly was. In fact, if he hadn't done that, I don't know where I would be. I'd probably be retired with a kind of a steady paycheck every month, enough to live on and not much else. I'd probably be planning my one vacation a year. Uh, you know, Probably, I don't know, doing some mundane things and not really enjoying life the way I want. But by blowing up my account, he forced me to do something, to get off my butt and do something about my own financial future. And that's the funny thing about it. I was thinking about that. So many times, we're given these tests or whatever you want to call them, these challenges kind of thrown into the situation where you have to think or swim. Unlike sink or swim, sink or swim. Think or swim is the program we use. Anyway, yeah, I had to learn. I had to learn because okay. So what happened was I put a lot of money into my financial retirement. He blew up my account, half of it anyway. Then I realized, oh my gosh, I'm not a genius when it comes to that, but I do know that if you lose half of your account, you have to double what you have left to make up for where you were. Never mind any lost growth that you had in the interim. So I quickly contacted my buddy. He was, of course, my friend. They always come on as your friend. I said, Mike, what's going on here? And he realized he was losing me. He's trying to do everything he can to save my account, but I said, just cut me a check for whatever you have left. I'll be by the next day to pick it up, which is what I did. And I was very upset about that, but kind of accepted the fact that I may have to, pour coffee in my retirement days, and I'll never retire. I'll probably be 90 years old if I live that long and working at something, maybe even who knows, a paper route. you know. Hmm. Isn't that a scary thought? Isn't that a scary thought? And some of you may have thought that too. But I said to myself, I will be damned if my kids are not going to go to good schools because I neglected their accounts and the financing of going to good schools. I dreaded the thought of, my kids having to drop out of school to go to work and going down that path. Not that there's anything wrong with work, there isn't, but if it's honorable and all that. But I mean, the idea here was for them to have a better life than me and certainly get an education, either as at least as good as my education, at least, but actually better. Because in this day and age, if you don't better yourself with every generation, you're actually falling behind, right? You know that. Regular bachelor's degree years ago would be worth something, but not anymore. My gosh, if you don't have a master's or a PhD or something, nobody's going to look at you. You know that. Be lucky to drive a pizza delivery or Uber. Oh, there you go. Anyway, so I realized I have to do something. So I got my, whatever I had left. I forgot what it was now. It wasn't huge, but it was something. So, okay, first of all, open an account. Open an account and learn to trade. Learn to trade. I figured I understood numbers. I understood risk working at an insurance company and internal audit. So I kind of knew a little bit about this stuff. I just had to hone my skills and figure out this whole stock trading thing. I started with stock trading, of course. I think that's probably a place where a lot of people start, right? And you might be able to relate. So I started, I picked a stock that I liked, stock that I knew maybe. I didn't know the stock, but I knew the company. Well, let's see, I eat, I don't know, Darden restaurants or something. Okay, we'll go to, I don't know, Olive Garden or whatever it was at the time. I don't even remember now. I used to, well, shop at Walmart, so I'll buy Walmart, whatever. I'm just saying, but That wasn't the way to go about this whole thing. I realized, you make a little bit of money here and there, but you're putting a lot of money in and not making a whole lot. Some of these stocks cost back in those days $20, $30 a share. My goodness, if I was to buy 100 shares, it's going to cost me good $2,000, $3,000 or whatever it was. And, it goes up, what, 50 cents? Am I supposed to be happy with that? I realized I have to hold on to it for a long time, but I knew there's a faster way to get into this. And as I kept learning, I seem to have been directed down a path. I don't know if you ever kind of, I know it's kind of out there, but I really think God directs you, opens doors. Hey, come through here, come through here. Hey, pal, this way, this way. Okay, you got to go, you got to turn right there, right? Well, that's what I did. I looked at other instruments like futures, forex. Oh my gosh, I have horror stories on forex. But sometimes you get burned at these things before you get good at them, right? You have to realize that this is not for me. I remember Forex. I got all excited about Forex. Wow, this is kind of cool. I was reading how the Chrysler Corporation, the people that make cars, well, they have a little room back there somewhere hidden away. You get these guys in there. All they're doing is trading currencies. And I recall reading something about Chrysler making more money on foreign exchange than they were selling cars. And I saw the Forex market and just how huge it was. Well, this excited me. And, trading one currency against another. Swiss franc, German marks, US dollar, Canadian dollar, Australian, whatever, euro and all these things. And I kind of got into that, and I was attracted to the fact that it was 24/6. I think 6 days a week, 24 hours a day. And I remember, oh Lord, I remember being up all night. Being up all night. I'm in there trading Forex. Oh, well, I wasn't making any money. It's trading Forex or just watching it, trying to figure out which way, trying to learn all this stuff. And back in those days, I'm just kind of diverting some attention here. But these are what the Sunday night sessions are, folks. Are just little chat sessions and kind of get to know each other a little bit. But I remember the Forex. I had a Forex account that had a front end to it, a practice. It was a practice thing using phony money, like a paper account. And I was making all this money on this paper account. And then, well, this is great. So I thought, well, I'll switch it over to the real account now and just let it go. And I had it set up on a separate computer, so it was all automated. Because the automated paper account was working extremely well. So all I had to do is just flip over to the real account, use the same program, and it's just going to be a money machine, right? Like an in-house ATM. It's going to be awesome. Well, in 1 week, I burned through $5,000 with this new Forex account. Then I realized, oh yeah, they do something when they switch it on to real money. I'll tell you, sure didn't work the same. Well, that's all I needed to know. But in addition to that, I'd be up all night, 1, 2, 3, 4 in the morning. There, my wife comes down to my office. Says, "Well, are you coming to bed?" It's 7 o'clock in the morning. The options market opens up in a couple hours. I might as well stay awake for that. And I kind of crash for an hour or two somewhere, and I wake up and do the options trading. And I won't say that my wife was about to walk out with a suitcase just to kind of make a point, but I probably wasn't all that far off that, if you know what I'm saying. It was not healthy for anything. Certainly not healthy for a relationship, not healthy for the family, wife, and kids and stuff. And you need a life. You need a life outside of trading. These are all lessons I learned the hard way. You need a life outside of trading. You need to be in balance. You have to be in balance. You have to make trading your slave, not you the slave to it. Okay? As addictive as it was. The other thing, I really wasn't making any money on Forex. What the heck was I doing here? This is crazy. I was depriving myself of sleep and, the ramifications of that. You don't, it's hard to stay healthy when you're not sleeping right? Anyway, I got in options. Then I started trading options on certain companies. Of course, I didn't really know what I was doing. I'd make money one day and, and do the same thing the next day, except instead of making money, I would lose it. And I say, what happened? How is it that yesterday everything was fine and today it's no good? And I'm talking to people, and they said, "Well, do you do anything with the Greeks? Are you looking at the Greeks at all? It doesn't sound like you're paying attention to the Greeks." So, it's all Greek to me. What do I need the Greeks for? I said, well, you better look at the Greeks because if you don't understand the Greeks, you're going to lose all your money. And they were right. 100% they were right. Again, I was sent the right people at the right time to pay attention to you. Long story short, very, came around full circle. And anyway, I went to SPX, I went to SPY. I found SPY, the baby sister to SPX. SPY is the stock. That is the stock, the spider stock that follows the top 500 stocks in the US, the top 500 stocks. So I didn't need to do all that analysis that I was doing before. I'd be up for hours analyzing trucking companies and FedEx and UPS and all the seasonals and you name it. I was analyzing to death. Analysis paralysis. I'd have charts, I'd have indicators, a million indicators. Didn't even have the price chart on anymore. It was just all indicators and stuff. Not making a whole lot of money. Sometimes I would luck out, but most of the time, just kind of treading water. I don't know if you've been there. Anyway, I'm just kind of rambling on this stuff, but long and arduous load, circuitous. I think you know the word. Came around, wormed around. Day trading options on SPY. That is the place for me. When I discovered that, I felt like I came home to my mothership. Okay. By the way, just so you know, there's a storm outside. You might hear thunder, and I hope the internet doesn't cut out. So I'm going to kind of move this along. Folks, long story short, if you want what I have, you got to do what I do. I'm successful as a trader right now, and my name is Hugh. And this is what I do. I day trade options on the SPY. That's all I do. I don't look at any other stocks. I don't care about any other stocks. If you were to tell me Microsoft is going to the moon, you better buy options. You know what? I'll say good for you. Not, fill your boots. That's what I'll say. Here's a look at last week, folks. Let's quickly go through this. On Monday, SPY rose in pre-market, but just couldn't hold it. Closed only slightly over Friday's end of the day here, driven by caution ahead of the major upcoming quarterlies from four of the Magnificent Seven stocks. We're going to hear from Microsoft and Microsoft and Meta on Wednesday, Amazon and Apple on Thursday. Tuesday, all right, there's a little caution here. Tuesday, a slight recovery from the day for SPY, gained just 0.22%, supported by rotation into value and non-tech sectors, while investors were awaiting the results from the mega caps. Wednesday, a little hesitation leading up to the Fed Reserve rate announcement of holding rates. They held the rates at 3.5 to 3.75%. Pulled SPY down initially. Very normal. This is a very normal situation before the Fed Reserve rate announcement. I was counting on that. I was expecting that. I think we made money on that. And I also bought to the upside with the Fed announcement. And of course, the market did come back up from about 732 all the way to 742, 743. Shot way back up before dropping back down to 726 by the end of the day based on Fed Chair Warsh's comments. Washed out on the stock here on that rate. Hit a low 726 just after the market closed. Well, I love it when the market goes down because that usually initiates a move back up. You see what happens, the market goes down, and at some point, this happens all the time. At some point, just got to find out what that point is, but at some point, the buyers will come in. They always do. They see, hey, I know what's going on. This is a great opportunity to buy. The buyers come out, and that's what happened on Thursday. SPY climbed 1.66% as personal consumption expenditures. This is the Fed's main inflation indicator, PCE. Came in lower than expected, and that's anti-inflation, which is really good. Then we had earnings from Microsoft. That added a record $450 billion in market value because they said we're careful about AI investment, and the outlook was good, and the sales and revenue and all that stuff was really good. Amazon, however, that also toed the line with an additional 3.9% during market hours, plus another 8% after the bell. because their earnings came out after the bell. Now, on Wednesday, we had Meta, which actually I believe was fell, but it looks like Microsoft held the dominant force there, pushed it back up, and Amazon took it further on after hours. On who was we also heard from let me see Apple on I think Apple went down a little bit. I can't remember now. It doesn't matter, but it looks like Amazon held the line on that one for Friday as well. S&P 500 capped off a volatile month and ending the month rising 0.7% after Amazon surged over 15%. That was on Friday. That was a pretty good. It turned out to be a pretty good week altogether. We made some money along the way, and I don't necessarily put up what we made anymore because it doesn't really matter. I mean, what we make isn't going to be what you make. What you make isn't going to be what we make. We have a lot of people making more than we do. We make more than others. Unless you're in the trading room, and even in the trading room, it's very difficult to just follow penny to penny what we do. We announce our trades. We tell you when we're getting in. You might get in for a better price. Maybe we'll get in for a better price. Doesn't really matter. But we're generally in the same. We're generally in the same boat with all that. So here's a look at the seasonal charts. All right, so charts have seasonalities with them. Stocks and exchange traded funds, they all have some seasonality to them. Sometimes you'll see a particular stock go up at a certain time every year. Other times it'll go down at a certain time every year. And this here is a chart of the seasonals. The blue line is where SPY is now, and the red line is actually a composite of the last 5 years average price closing on the daily charts. You can see how it zigzags up and down, but it kind of trends to the upside. It generally has a trend to the upside here as the year goes on. It doesn't always go up. But let's just zoom in a little bit here to see how it looks as we focus in, going back to last week. And according to this here, historically, SPY rose about 1 point last week, and historically, SPY fell about 1 week the following week. So kind of flat in the next 2 weeks these 2 weeks that we're seeing. Now, does it mean we're going to continue on like this? Maybe, maybe not. We do still have a lot of earnings to come out. Bloomberg Intelligence estimates that the earnings this season are something like 26% higher than they were a year ago in the same situation. So we may still see a move to the upside, kind of flat here last little while, but we had a nice little gain here in the last week, a few days. So see what happens. Here's what happened last week. Of course, the big news was the Fed Reserve rate announcement on Wednesday, and also tech earnings took the spotlight. Again, the Fed's held the rate steady, 3.5 to 3.75. That was expected. We really didn't expect a rate increase, although there was some dissension with the Fed vice presidents. I think three people voted to raise the rates, but they did not. Earnings from Microsoft, Meta, Amazon, Apple. These guys, in fact, I better spell Apple right. It's just two A's, not one. Okay, there we go. I'm a stickler for grammar. These guys led the market mixed. We had some mixed reactions, suggesting that investors seek evidence that heavy artificial intelligence spending will translate to durable revenue and earnings growth. They're saying they're pulling back and saying, okay, you guys invested billions and billions, hundreds of billions, trillions, God, oh my gosh, no end in sight to this artificial intelligence. We want to see it materialize into some earnings and growth. We want to see how you are going to, make this thing work. You're building these data centers all over the place. Massive, massive infrastructure investment, unlike anything we've ever seen before. All right, so now they're stepping back. They want to see, well, let's see how this is going to work out. Anyway, interest rates may remain higher for longer, but resilient economic growth, strong earnings, and this can carry on to support equities. They're looking at the second half of this year to be more or less a continuation of the first half. Here's personal consumption expenditure. Inflation eased a little bit in June, but remains well above the Fed's target. Their target is still that 2%. They've been at that for a couple of years now, if not longer. And you can see that the core PC inflation is coming down. PC inflation is kind of drifting down, although Yeah, we've had some, well, the war. Okay, so the war and oil prices, right? Oil embargoes and all that, that pushed it higher here early part of this year. Iran, hopefully this is going to come to an end and oil will start flowing again, bringing inflation down. Concern too is with tariffs. Hasn't materialized horribly yet, but it is higher. And of course, they're saying, "Oh, these are just it's a spike because of oil. We'll see what happens." Anyway, I get a suspicion that they are going to get a little more aggressive in September's Fed meeting with getting inflation down by increasing the rates a quarter point. That's kind of my projection that they're going to raise the rates a quarter point. S&P 500 earnings growth still projected to remain strong. As you can see here, Q2 in 2026, it's actually coming a lot stronger than than expected here. What they're going to see what happens. But you can see that according to this chart here, their projections are still very much to the positive side. So we'll see what happens. Here's the data from the week here. The S&P 500 rose 1.1%. Year to date, 10.1%. The Dow is running around 10.2% year to date, and the Nasdaq is down at 9.5% year to date. All right, so what's coming up the week ahead? We've got Institute for Supply Management PMI, also S&P Global Manufacturing PMI on Monday, JOLTS job openings on Tuesday, ADP non-farm employment change on Wednesday in S&P Global, and ISM final services PMI on Wednesday, along with unemployment claims on Thursday. These are the big news items that are going to move the needle, right? And on Friday, some employment numbers, average hourly earnings, non-farm employment change, and the unemployment rate. How does this translate into volatility? The way we figure it here: high on Monday, medium on Tuesday, high on Wednesday, medium on Thursday, and Friday. As we head into Q2 earnings season this week, still, all right, there's still lots of companies to report. And I don't believe any Magnificent Seven companies are scheduled to report this week. I'm pretty sure they're going to be reporting the following week, not this coming week, but the week after. Also, expect elevated volatility whenever President Trump speaks, right? Or one of these guys. So I put that on there because we don't know when he's going to speak. Those moments come up sort of unexpected. They just kind of appear on the schedule, and then he speaks. Something like when Kevin Warsh, Fed chair, right? Kevin Warsh, when he speaks, volatility increases as well. But those are more scheduled items, and we can generally, excuse me, anticipate the market whenever he speaks. So we'll see what happens this week. Probably a relatively calm week. Nothing major going on. 2-minute tutorial. Here's a question for you. Are you an athlete? Or have you been an athlete in your younger days? It's like I'm talking to, a bunch of old people. That's not the way I mean it at all. I mean, I used to play sports and do sports and different things when I was younger. Of course, not so much anymore. You're not going to see me on a football field now. It's just not going to happen. So, but if you were an athlete, you have probably a pretty good grounding in trading. Athletes and traders actually share some real key mental attributes like emotional control. As an athlete, you have to accept losses. There can only be one winner in a tournament, right? Tournaments are funny things. They get a bunch of teams together. They play each other in some sort of a, funny roster, and well, okay, you lost, but you're the next round, you lose two or three times, you're out. Whatever the structure is, and they have a bunch of games, and eventually, the best, the cream rises to the top. Mind you, they say something else rises to the top too, but we'll still stick with cream. The cream of the crop rises to the top, and eventually there's a winner. So, but along the way, there are lots of losers, right? Doesn't mean you are a loser. It just means you're a loser. So, if you want to be a successful athlete, you have to accept loss as part of the game, right? And that's what we do. So, now athletes have a lot of discipline under pressure. I know athletes who will get up at 5 o'clock in the morning to go work out in the dead of winter. I'm sorry, I will never be one of those. Never was. It's just not going to happen. But I applaud those that do, and it's actually amazing how some of these athletes, good athletes, they are so incredibly disciplined. They will go to the gym and they will work out, 8 hours a day or whatever it is that they do. They work under pressure. They're very good at under pressure. And again, as I mentioned earlier, they accept losses quickly and they have superior decision-making abilities. When you were an athlete, and let's say you're on the field, let's say, I don't know, even baseball, anything, you have to make decisions. Do I hit a fly ball? Hopefully that guy, the catcher way out in left field, misses it. I kind of sense that he's a little weak, so I'm going to see if I can direct it over there. Or do I just hit a ball so it kind of rolls on the ground and I can get to first base? Do I see if I can steal this next base? Can I steal third base? Or if I steal it, I'm up one, but if I lose, I'm out. Probably the other guy too. And lots of decisions in sports, right? In football, decision you got to plan out the plays, right? A lot of decision-making abilities. These are all attributes that carry over into trading. Trading. If you are an athlete or haven't been, you may be, you probably are predisposed to greater success on the stock market. You have emotional control, you have discipline, you have decision-making capabilities. You have the ability to accept losses. In trading, you have to accept losses as part of the game. I saw a video, I don't know, it was a TikTok or some kind of a video, YouTube, or some video about some idiot going on. I never lose. I made $37,000 in half an hour, and he starts swearing and throwing chairs and different things. Oh my gosh! I hope people don't fall into that trap. In fact, guys like that really infuriate me because they make they make the solid. They make the solid traders, the guys that have been around a long time, they make us look bad. They make us look like they're winners. But I look at some of these guys, I shake my head. Are you kidding me? You can't possibly be serious. Anyway, not to knock them. I'm sure there's some people that fall into that, but whatever. But if you are successful, or if you've and it could be any kind of sport. Like I mean, I used to ski a lot back in my younger days. And I didn't have too many losses, but I had to take some hits. You fall, you fall a lot, especially when you're learning. I mean, that's not really the kind of sport. I'm talking about some sports like football or basketball, right? You have to quick decision making in basketball, right? Very quick, like microsecond decision making in basketball. Here's a guy sitting on the net. Do I throw it to him or throw it to this other guy to set him up? Or there's a lot of stuff like that. But as an athlete, you are honed. You are trained. All right, you're highly trained to do this, and those are the attributes that very nicely slide into trading. And I've talked to some people who were successful, and I asked them, well, what'd you do in your past life? Well, I was this, I was that, I was a pilot, brilliant. I was a doctor, brilliant. I was this, these kinds of things, and all of these disciplines, not just athletes, but some of these disciplines, like pilots. I had a client years ago. He's a fighter pilot. You want to talk about decision making? He was it, man. He was the epitome of decision making. So they would, they bring these attributes into day trading, and it's just a natural progression. Natural, very natural, and they're very good at it. So anyway, if you were an athlete, um, congratulations, you are predisposed to success on the stock market. All right, let's move along here. Our goal 2026. This is where we started tracking all of our trades in the trading room, just the ones that we are narrating, that we are executing ourselves. And if you'd have only have purchased 5 contracts per each of these trades in the trading room, and all of our trades, this is where you'd be up to $38,520 profit. That's gross, so less commission, of course. And all the trades are in here, and they're all pretty good. This takes us to the end of Friday. So we're well on the way. We'll probably hit, what was this, 38,000? I don't know where we're going to end up, but you know what? Divide that by 7 times 12. If we track along this, so we should hit 66,000, somewhere between 65 and $70,000, I'm guessing here. Not bad considering that you're putting in an investment of somewhere between three and $4,000 on average per trade. I think it's pretty good. I think that's pretty darn good. Folks, I got some exciting news for you, especially if you are somebody new with DayTradeSPY. All right. So I got some very exciting news, and I'll tell you about that in a couple of minutes. So don't go too far. All right, I'm going to tell you about the trading room first. The trading room. This is our signature service that we provide. Now, you hear me talking about some of our other services, our DayTradeSPY Signal, our DayTradeSPY Pick of the Day. These are good alerts if you do not want to watch the markets, if you're not, watching charts. Maybe you're working, maybe you're running the kids to school or doing something else in the morning. You don't have the opportunity. But if you do, if you can come on, even for a short period of time, we are in the trading room every morning. Every morning, John and myself. Now, who is John? Who's John? He's a nobody. Well, yes and no. He will tell you he's a nobody, but he's actually a somebody. John Johnson he used to be a lawyer, still is a lawyer, but he used to practice law, but he wanted to recapture control of his life. So he quit the law business and got into just trading. And he was a trader from a long time ago. Again, similar story to myself. Came in by accident and started teaching people because he was successful. And he joined us over a year ago. I guess maybe year and a half ago or something. A year and a half ago now. He's my cohort in the trading room. Great guy, very intelligent. He comes with his own set of indicators. I'll spy all the time. I come with my set of indicators. I'll spy all the time. And it's pretty cool because we each do our assessments separately. And we have a saying that says, when our indicators unite, our trades ignite. And let me tell you, ignite they do. And that's why the people in the trading room are highly successful. They have the benefit of two pro traders, in their back pocket that they can draw on for information. They can draw on for mentorship and coaching live every morning, 9:30 to 10:20 Eastern Time every morning. All right, 9:20, 10:30 Eastern Time. And this is where they are, it's an interactive session. They can actually ask questions in the questions box. Learn and earn, right? We tell people, especially if you're new, just paper trade first until you're very comfortable with what we're doing. Then slowly transition to real money and go from there. These are fully narrated sessions where our strategies come alive. 9:20 to 10:30 Eastern Time, recorded for later review. If you miss it, not a problem. All right, as a subscriber, you have access to all of our recordings, trading recordings. For this price, seriously, I cannot stress what a deal this is at $24.95 a year. Or if you just want to give it a try, $6.99 a quarter. Works out to about $54 a week. Unbelievable service. And the beauty is, if you don't like it, you can always get your money back in 30 days. I don't think I put that on a screenshot here this time, but that's what it is. Folks, check out the QR code. If you missed the QR code, no worries. Later on at the end of this session, I will put the QR codes back up on the screen, as well as for the other services that we have. So rest assured if you missed this QR code now. But anyway, all right. This is the best value of what we have, folks. And you know what? I have people asking me, well, I don't know how to trade. I don't know the strategy. I don't know this. I ask them, do you know what calls and puts are? They say, oh, yeah, I know that. Okay, great. This is where you need to be. This is exactly where you need to be. All right. So, folks, by the way, I hope I'm not speaking too fast. I know sometimes I do speak a little bit too fast. And it's not that you're listening slowly. It's just that if you do find I'm speaking too fast, put it up in the questions box. Or if I'm talking about something you're not quite understanding, let me know that too. I guess I feel I've done it so long and I get very passionate about what we talk about. And I just have this compulsion to, get all this information in this little, hour that I want to spend with you. I don't want to carry you on longer. And maybe I stretch some of these stories a little bit too much, but it's good to know the background, okay? John and I are not a couple of these, you know, these guys that are trying to, hey man, oh, the testosterone, really? Hey, successful trading, wealth creation. If you want to create wealth, this is where you need to be. You get the success of two expert, two professional traders, John and myself. You know that together, I used to tell everybody, together we have 45 years experience. I was wrong on that. I was wrong, wrong, wrong. So it turns out I did a little investigation. I did a little math. Between John and myself, we have over 60 years of combined trading experience, over 30 years each of us. I didn't realize where time flies, but it flies. And I've been doing this, many years, back in the 1990s. Um, I think around the mid 90s. I don't remember when I started, mid 90s, early 90s. Anyway, early 90s. Same with John. Anyway, folks, let's look at the questions here. Hello from Georgia. Hello from Houston, Cincinnati, Ohio. All right. Cincinnati. Oh, man. The TV show that put Cincinnati on the map. WKRP. Oh, I love that show. I miss that show. All right. What time frame do you think the big institutions use to base their exits and entries? Um, I don't know what time frames they use. Um, I am guessing a lot of the institutions are using, well, first of all, they're using a lot of fundamentals and what their sort of their ideas are there, but what time frames they use, they probably use a lot of um, high frequency trading. It hits a certain. They probably look at. I have no idea. I just be guessing, Mark, on that. I know what we use that works very well for us. Whether we don't follow them in any particular way. I know some people try to follow what the big guys are doing, and maybe it works, but I think that by the time they roll in with their trades, we're on the back end, right? I like to follow. I kind of brought up the volume chart on the 1 minute chart just to see what happens. And there's a pretty good relationship between the price activity and the volume. And we kind of talk about that in the trading room. So I think that's kind of a good thing. But we have different indicators that we use. So basically, John and I, we use a limited number of indicators. We're not one of these guys that put dozens and dozens of indicators on our charts. That generally doesn't work because as you're waiting for all the indicators to line up, all right, that move is going to be over by the time that happens, and the move is over. The trend's no longer your friend. You want to try and get it. What you want to do is find the indicators. And this is what we found. We discovered, right, the indicators that are very effective, that work very well for us. And even though the indicators are lagging, but we have a good way of putting them together. It kind of shows us what's likely going to happen when you combine them with chart patterns, certain indicators, certain setups, news, all the various inputs that we use. Okay, so it's actually pretty cool. All right, another question here. When I enter a sell order to make my 6% of the day, what should I also enter for stop loss? How much should it be? Okay, Mark. We had a lot of marks online today. All right, so John and I, we don't use stop losses per se. We found that they generally do not work well with SPY options. Now, you would think that theoretically they should, but they really don't because all too often your stop will be taken out and then the market will reverse, go back in your direction. You'll say, oh, if I'd have stayed in this thing 5 more minutes, I'd be in a profit. And everything I teach, and same with John, we learn the hard way. So we don't really use stops like that. Now, we use, I guess, mental stops. But it's not a percentage necessarily or a dollar amount. We might use, say, on a scalp, we might say, okay, if I'm down 25 cents, I'll take it. I'll take the loss because I can always make up for it down on the other side. But I look at, I combine fundamentals with the technicals. This last week, as a matter of fact, I think twice I got into some call options, and then the market went down, went against me. But there were reasons that it went against me, and I stayed with it. And then there's a certain point where I repaired the trade. So I brought my average cost down, and I made out very, very well because by the end of the day, the market had gone right back up, and and I walked with a really nice profit on both of those positions. So I manage my positions in a little different way. It's not just like a stop loss, and and I know that as an example. So when we buy an option, we like to buy time. Time is very important. Time is like insurance. Okay. Even though you're, looking to get rid of the option in a few minutes, but by buying time, you're still giving yourself a level of comfort that should something go horribly wrong, you're not deep in the weeds. Okay, you can weather the storm, which is kind of what it is. Like an example right now, it's raining outside, there's a storm going on, and but I know for a fact, as long as I'm sitting here, that the storm will pass. It'll pass because it has passed forever when it comes like this, and I'm pretty sure it's going to pass again. So, and that's the way it is with trading. So if you buy time, and by time I mean on Mondays and Tuesdays, we like to buy the same week's Friday's expiration. Then on Wednesdays, Thursdays, and Fridays, we buy the following Friday's expiration. So that's a good balance between risk and reward. You don't want to buy so much time that you're putting a lot of money into the premium and there's not a lot of movement. So you want to get that balance in. It's a very delicate balance, and you got to get in that. But we don't use stops per se. We have other ways to do it, and we show you that in the trading room. And we will talk about, okay, I don't like where this is going. I'm going to get out of it. And we've done that before. So sometimes I might say, I'll take a small loss. I'll take maybe a 20 or 30 cent loss, but that's not in stone where I do that all the time. Depends on how I feel about the market, I guess is where I'm going with it. All right. Okay. The idea that the S&P 500 inspire the same thing. Basically, sometimes these two market entities will be moving opposite of each other at the same time. What's the difference? Reggie, I'm not aware that they move separately. The S&P 500, which is SPX, every time I've looked at it, it's always worked concurrently because the SPX would be like a basket of the top 500 stocks. It's more expensive than SPY. The options are more expensive. It costs about 10 times what it is. Volumes are different. Even their expirations, I believe SPX is the European system whereby they you can only exercise them at close, at expiration. Okay, they can only be exercised at expiration, whereas SPY can be exercised. It's under the American system. It can be exercised any time up to expiration. So, I mean, that's probably generally not going to affect any of us as traders. But I found that SPY moves very concurrently to SPX. Maybe you're looking at a sort of a micro level where one is, is I don't know, moves a little faster than the other. I'm not sure, but I've not noticed any material difference between SPX and SPY. So they're pretty well the same thing because it's following the S&P 500, right? So if you find something on that, Reggie, let me know. Send me a screenshot, please. I'd like to look at that, and that's what that is. But SPY is affordable. A lot more a lot more shares trade on SPY. It's much more affordable, roughly one-tenth the cost of an option on ESPX. More liquid, I find, and the spreads between the bid and the ask are nice and tight on SPY, which is the perfect setup for me. Liquidity, good bid and ask spreads, predictable moves. When you combine that, it's like, oh, it's really nice. Hmm. Pardon me, I want to take a drink here. Um, SPY also gives you the adrenaline rush that you need sometimes. I mean, let's face it, market's not always going to move in your direction. And but again, if you have the time and you've got it figured out, you've done your analysis and you're pretty confident with the move, yeah, you'll probably generally do okay. And that's how we do okay. All right. Okay, Phil L. Do I stick at the quarterly price? Um, As far as I know, yeah, I mean, so if whatever plan you're on, you should just continue on. If they change anything on you, um, contact customer service at DayTradeSPY and let them know, what it is that you're doing. All right, so what I'm going to do is I am going to move along here. Any other questions? Let me take a look real quick here. If it's important to buy time, just say, why not always purchase an option that expires 10 days later than always going for the following Friday? That's a good question here. Why not buy time that expires 10 days later? You could probably do that too. Again, I just found that Friday's expiration, I guess, used to Fridays because that's kind of where they first started to expire. More liquidity. I found that sometimes, like let's say 8 or 9 days out, if it's midweek, you're not going to have the same liquidity. All right, you might just get a few hundred contracts traded versus thousands or a couple thousand on the Friday. Uh, you could try that, Mark, and see if it's any different for you. I don't want to do too far out, like 10 days, because again, they're going to be costly, and you're also going to perhaps not get as much of a move on the option as you would slightly less than the 10 days. So maybe, 7, 8 days is fine. 9 or 10 days. If it's a Wednesday, then the following Friday gives you lots of time. You'll probably be paying, you could be paying $6, $7, $8 for an option. But don't worry about what you pay for the option because you're going to get it back when you sell anyway, right? But you still want to get that balance between risk and reward. You want to get the movement in there. So that's kind of where it's kind of important. So another question here: success by going out sufficient days such that the at the money SPY calls $3.50 to $4. When I buy 10 at the money calls. My bracket order includes taking profits at 6%. I do this many mornings after the morning drop, and it reverses up with 2 or 3 candles on a 5-minute chart. Okay, whatever works for you, Peter, on that one. That's a good strategy, perhaps. So if there's a question in there, I'm not sure they must have missed it. I don't use bracket orders. So what I do is I'll buy an option. Okay, okay, it depends on the strategy. Okay, but generally, when I'm looking at buying an option, there's a lot of things that I look at. And with experience, you get good and you see a lot of these things instantly. Okay. For me to sit here and try to explain it all to you like this, it will not do you justice. But one of the things I look at is to make sure there's ample room to grow into. All right. Just because maybe the setup is there doesn't mean you should get into the trade because if you're limited by how much room there is to grow into until you see the next, say, resistance level, if you're buying a call option, you could be doing yourself an injustice, but because let's say you're only gonna, it might just go up, say 10 cents, 10 or 15 cents before it hits major resistance. Well, that could be a problem, right? Because if it bounces off resistance and goes down, now you're sitting there holding the bag, even though the setup might have been there, you didn't have room to grow into. So you want to make sure you're able to get up to a resistance level that's high enough to give you the profit that you expect. So I analyze to see, well, what's my profit potential first before I get into it? And I look at the downside as well, all right? See, well, where am I going to go? Is it going to go down? Is it going to bounce off support before I can go up? Is there pretty good support? Does it go back far enough to lend itself to good support? I mean, there's a lot of things I look at. And the thing is, I'll get into an option. I don't expect to stay in it long. I try not to hold overnight if I don't have to. I want to get in and out quickly. So let's say I bought something for $5. I'd like to get out of it quickly. Now, I know some people like to trade same day expirations. I have done those in the past. They are higher risk, higher reward. They cost less. They're very attractive, and a lot of people do them. When you look at the volumes on the 0 date expiration, I see that as the number of gamblers out there. It's actually pretty interesting. There'll be tens of thousands of people, traders, volume on 0 date expirations. But a lot of those 0 date expiration options, folks, they expire worthless. And here's the thing, if it goes in your direction, that is actually awesome because now you're going to make some pretty good coin, right? And it's really important. But when it turns against you, they are so fast to suck the premium out of there, it's not even funny, and very slow to add it back in. So if you're going to do zero-day expiration, be very careful. Do not put a lot of money into it. Be prepared to lose what you put in. It could turn on you in a heartbeat. Folks, I told you about a new service we have. Actually, it's a new feature. We had it a couple years ago. We just got so busy, we took it off. All right. But what it is, it's you can schedule. This is especially good for the new people, right? Talk to us. If you're not sure which way you should go with Day Trade Spy, schedule a free, no obligation, one-on-one chat with myself or John to discuss how we can help you become a great trader. It's a short 10, 15, 20-minute Zoom call. That can make all the difference. I know a lot of people, they don't know whether, oh, should I go with this? Should I go with that? What's the difference between the pick of the day and the day trade spy signal or whatever. And this is really kind of important. Okay. So we want to help you make the right decision. We don't want to get you into a program that is really not something for you, even though you can cancel in 30 days and get your money back. So all you have to do is this. You can schedule it yourself. You go to our website, daytradespy.com. Right here under the gold banner, right in the middle, it says schedule a meeting. Click on that, and you're going to get to our Zoom calendar. Pick a date and time. It's going to be a few days out, possibly. Pick a date and time. And all we ask is that when you do, right, when you do book, that you honor your booking. Now, if you do have to cancel, not a problem. Cancel it properly. Let us know. But please do not book and not show up. And this is one of the reasons, the big reasons we took it off our service the last time, because we would have people booking and then they don't show up. So meanwhile, these people, they blocked out our time, which is not free, right? We blocked our time. We can't do something if we're scheduled to meet with you. And if you don't show up, well, that's not right and that's not fair to us. So we had enough of that. So we said, okay, we'll just cancel that whole thing. But we're bringing it back in hopes that people will honor their bookings and that it's not going to be an issue, but in hope that we can answer your questions one-on-one. All right. All right. So schedule a meeting. The exciting new feature is schedule a meeting with myself or John, and we'll see how we can help you become better traders. All right. Now, here's what I want you to do. I want you to pick a number between 1 and 100 and put it in the questions box. All right. Between 1 and 100, put it in the questions box. And the winner will get Triumphs and Tragedies ebook, the person closest to the number. And if there's a tie, let's say two people are within two numbers of the winning random number generator, then you will each get the ebook. And let's do that. All right. So I am going to give you about 30 seconds to punch it up in the questions box. All right. A number between 1 and 100. And we're just going to get everybody in here. All right. Okay. And I'm going to pull up okay, there, I'm going to, this here, there it is. Between now and, okay. All right. Can you give another few seconds here? 5, 4. That's not the number, by the way. That 50 is not the number. I believe that's last week's number or another number. All right. 5, 4, 3, 2, 1. All right. Okay, no more. All right, no more submissions. All right, we got them. All right, now I'm going to get ready and I'm going to click on the count of three and we'll see what the number is. So five, no, not five, 5, 4, 3, so 1, 2, 3. Here we go. Oh, the number is 5. Wow, the number is 5. Who is closest to 5? Let me go back in my questions box. Okay, well. Okay, Ralph is at 23. Okay, Ralph is at 23. Angie is at 11. Getting down there. And Charlene came in at 7. Well, the winner is Charlene. She came in at 7. Okay, congratulations, Charlene. You are the winner of this week's Triumphs and Tragedies. And with that, I am going to wrap it up. Wow. Very good session, folks. Thank you for joining us here. And by the way, here are the QR codes for the various services that we have. It gives you information and the ability to subscribe. All right. All right. Been a pleasure, folks. See you the next time. Take care. Good night, everybody.
You really want it, and if you do it, just shout it loud and clear. I wanna know if you really need it, and if you do it, just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, don't play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do it, just shout it loud and clear. I wanna know if you really need it, and if you do it, just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have